Hi everyone, welcome to the weekly market analysis video. As always, I stick to analyzing the S&P 500 futures. The ticker symbol is ES. Currently, the March 2023 contract is ongoing. So what you're seeing here is the market profile view. And so let's get right into what happened last week and what are the potential opportunities for next week. So last week on January 13th, I have posted a video saying that 4011 would be the line in sand. So above that level it would be bullish, and below that it's going to be bearish. So it was a pretty short week this week, as I mentioned, because Monday was a holiday for Martin Luther King's birthday. What I have done is I have merged the profiles of Friday after market close, and then Monday like half day futures were still trading, so that one, and Tuesday's pre-market, I have merged all of them. Turned out to be like this. And on Tuesday, where the regular market hours were valid, we had still opened within the spike zone of last Friday, as you can see here. So this is Tuesday, January 17th, and then we formed like a B profile, and then there were some weak references. So the following day, which is Wednesday, we had opened within the prior day's range, and then we repaired those weak references and fell below, creating a new spike to the downside, meaning with a lot of single prints. That's why you were still seeing them in the chart. So there were a lot of single prints. And then on Thursday, we formed like a almost balancing profile. We still didn't close within the 3-day balance zone. If we had closed within 3-day balance zone, then target would be like the other end of the balance zone, which was like 30, 38, 22 would be the target, but we still didn't get the close. So on Friday, we formed like a P profile in the overnight session, and then we had opened within the Thursday's range, and then we broke the P profile high, so we got essentially like a firecracker effect to the upside. And look how many sets of single prints we formed. Like 1, 2, 3, 4, 5 sets of single prints we formed, and we literally closed near the high of the day. So that brings us to what are the potential opportunities for next week. So since we formed a new spike today, which means there is insufficient time for price to retrace back to the mean value, that is the point of control. The spike base would be the line in sand. So the new spike base for next week would be 3973.5. You might see it slightly. Yeah, let me zoom in and then you can see it. So spike base would be the line in sand, which means above that you want to stay long or buy call options, or below this you want to stay short or buy put options. So 3973.5 again would be the line in sand. Let's jump into the candlestick pattern analysis. Let's start with the top down approach. Let's go to the monthly chart. And in the monthly chart, as you may notice, we are still trading fully within the prior month's range. So the trend on monthly is balancing, which means it's choppy sideways price action. And then let's go to the weekly chart. So on weekly, the trend is up but balancing, because we closed within the prior week's range. Like we broke the prior week's high, but then we closed within prior week's range. So the trend on weekly is up but balancing. And then let's go to the daily. So trend on daily is up because we broke the prior day's high and we even closed above. So trend on daily is up. So that's about it, guys. Let me summarize again. So based on market profile view, spike base is going to be the line in sand, 3973.5. So below this you want to stay short or bearish and target these levels, and then above this you want to stay bullish and target these levels. And I hope this video is helpful to you. I wanted to share one more thing, because this is a pretty short week. I wanted to share you another useful tool that I use. I wanted to share with you. It's called pip flow. It's part of the Ninja Trader. So think of it like you see all the green candle, red candles, but you can't really see how is the distribution like within the candles. Let's say if it might be, let's take for example this particular green candle, and without noticing how the distribution is, you might think, oh, green candle is bullish, like, right? But if you knew that this was purely a short covering, meaning there's literally no sellers but only buyers existed, so that's like buyers jumping on the bid and trying to jack up the price, which means eventually it will come back down to that price to retest. So same kind of thing I have noticed today, Friday, January 20th. Let me show you what happened in the morning. So at around 6:30 the market opened, and if you notice here this particular price level, there were 5,000 buyers, but still it was a red candle. And if you see the cumulative value, there were 5,700 buyers but only 600 sellers. And you saw what happened afterwards, like an immense short covering rally that was triggered. So when you see a short covering rally, you can easily identify it, like price will not come down at all. Even if it comes down, it immediately gets bought back. And if you notice all these buyers, starting with the 5,700 buyers at one particular level, there was 5,000 buyers, which are around here, 39.25, and then you got like a if you just notice this bottom part where there are cumulative buyers, it was pretty big. Like the buyers continued, and then we again got like another short squeeze here. That's why you're seeing a big pump, and then it finally ended up closing near the high of the day. So that's it, guys. This tool is called pip flow. It's more or less like stripping the candle apart and seeing how the distribution of buyers and sellers looks like. Like if there is a buyer's imbalance, then it would show you like this kind of a green bar, like a cross bar. And if there is a seller dominance, then at a given price level, then you would see like a red bar, something like this. That's all, guys, that I plan to show to you guys this week, and I hope you find this video helpful. Thank you very much for watching again, and stay tuned by subscribing so that you don't miss future videos that I would post. Thank you again, and have a nice day. Trade safe. Bye bye.